Good morning, everybody, and welcome to our webinar entitled, What is ESG and Does it Matter for Investors? My name is Japheth, and I will be your host today. I'm a Provincial General Manager at Nedbank Wealth, South Africa, and I look after financial planners in the consumer segment. Now, ESG investing has become very topical in the past couple of years, and there's been different and evolving views about responsible investing. There are a few major questions that are usually asked, which I'm hoping that our panelists will help us with the answers today. One, what is responsible investing and why does it matter? Is it possible to invest in a way that considers the positive and negative effects of companies on people and the environment and still deliver good returns? While we're connecting with you online in this way, it is very important to reflect on connectivity and connections in general, especially when it comes to our money and financial matters. At Nedbank Private Wealth and Nedbank Financial Planning, we use our globally integrated and advice-led approach to connect your financial decisions to your goals and aspirations. The reality is that every single financial decision we make affects our ability to protect what is important to us and achieve our goals and dreams. At Nedbank Private Wealth and Nedbank Financial Planning, we make these connections more visible and therefore more manageable. We connect you to technical expertise, a global perspective, appropriate opportunities, and access to solutions and services from across Nedbank and other top providers. But most importantly, we connect you to the personal and objective advice you need to make your money decisions count. This is what we mean when we refer to connected wealth. Before we get to our topic today, I'd like to go through some housekeeping rules. Please use the Q&A chat box on your left-hand side to submit a question during the webinar. If your screen happens to freeze during the webinar, you can press the refresh button and it will take you back to where you stopped last in the webinar. In the coming few days, you'll also receive an email with a link to the recording of the webinar in case you would like to share this or watch it again. This morning, we're very privileged to have a panel of experts who will be talking to us about responsible investing. Our session today will be facilitated by Japheth Munyw'oki, who is a founder of a Pan-Africanist investment firm, Goodson Capital Partners. He's also a recent winner of the Global Impact Award in Business Leadership at the 2021 Global African Awards. Japheth will be joined in the panel by Binneman, who's our head of investment in Nedbank Private Wealth. Also on the panel, we have David Levinson, who's our head of responsible investments in Nedgroup Investments. And lastly, we have Justin Smith. Justin is the head of business development at the WWF South Africa. Without wasting any more time, I'm going to hand over to you, Japheth. Good morning and welcome.
Good morning, Zanele. Good morning to our online audience and to our panelists as well. I will want us to basically sort of spend the most time in trying to unpack this issue. I think it's not been spoken of properly and often enough and in the right platforms. So it's a privilege to have Nedbank basically bringing this conversation to the forefront with us. And we want to be able to sort of touch on what responsible investment is, what approaches, and does it make sense, and are you able to still make returns in the process? How do we unpack this? Essentially, this topic will cover three aspects, which are basically the ESG pillars, the environmental aspects in terms of how a company responds to the environment itself, issues that are at the forefront, like your COP26, your issues around climate change, issues around pollution, and issues around clean energy, which have been brought to the fore. Now, we also have to look at social aspects, which is basically how the company treats its own employees, how do they handle diversity within the business, and also governance issues from their stance on corruption, bribery, and whether management and the board itself appreciates and drives what you call diversity at that level. I would want us to start with Jason Binneman, basically on ESG approach. Jason, I believe on the saying that you can steal my recipe, but the sauce will not taste the same. So please take us through the ESG approach from your standpoint.
Great, thanks, and morning, everyone. And just, I was reflecting and watching the news over the last week. Everyone, I guess, is glued to their screens on the invasion of Ukraine by Russia. And just a comment on that, I don't think we've actually seen the kind of, well, never mind the government intervention, but corporate activity, specifically using the social hat of withdrawing capital from Russia, BP being a notable standout, withdrawing from their operations there. So, it's a very recent example of where corporates are exercising their muscle in this space. So, they're certainly not paying lip service to that. But let's dive in, and thanks for just defining the E, the S, and the G. I was going to do that, but you've done that very nicely, so thank you. So what I'm going to talk about is the approach that we apply for our clients who have portfolios with us at Nedbank Private Wealth. So ESG has a lot of definitions and there are a lot of acronyms floating around, so I'm going to start with a few just to set the scene. So the first one is the United Nations Sustainable Development Goals. There are 17 of them, and you can see them on your screen now. I'm certainly not going to read them all out. What is, I think, important to note is the ones in white. There are 9 of them, are the principles or the goals that Nedbank have adopted. And we really like, speaking of my own company, but we really appreciate companies that try and focus on, and rather that have fewer goals to focus on than all of them, and focus on the goals that they have influence over. So, the white ones are the ones that the bank is focusing on, and they've certainly announced quite a lot on that front. The next thing is the United Nations Principles for Responsible Investment, or UNPRI. These are principles that we subscribe to, and we are in the process of signing up to become signatory to this. And just going through them at a high level. First one, incorporating ESG issues into investment analysis and decision making. What I'd say on that is I think we have always done it, but it has become a lot more formal given the increased focus on this over time. We certainly have been in line with industry on the governance as that became important, and we're now integrating formally the social and the environmental factors. But those factors have always influenced valuations of companies, and so we have always considered them. Being active owners, we have a long history of engagement with companies on a variety of topics, and we'll continue to do that. And our proxy voting records are available on our website for everyone to see, and we publish those quarterly. Disclosure. So disclosure is a big one, and there's a whole lot of moves in the industry to formalize this because different people are using different measures. And so we look forward to finalization of that so that the reporting that we get from listed companies becomes more standardized and therefore more comparable. And we'll certainly encourage that. Promoting acceptance and implementation. We're having this webcast today, this webinar today, and this is part of that process. Through the broader group, we are certainly engaged on these principles at an industry level. With all things that we do, not just implementing ESG principles, we'll strive to improve what we do and evaluate the effectiveness of it, so that it's pretty much a business as usual, but we have brought the ESG more formally into it. And then reporting on our activities, just as we have reported on governance and proxy voting in the past, we will report on engagements that we would have on the ESG issues, and to that end, we have published our ESG policy report along with our governance report on our website for everyone to see. All right, so let's get a bit closer to what we do. So defining the approach, and we've already heard responsible investing being mentioned with ESG. It's important to understand all these concepts because it does speak to how we do things. So starting at the top, impact investing. That's typically private projects linked to a specific goal. Popular, you'll see the term green bond used, and it's typically linked to an outcome. For instance, reduction in rhino poaching, they would issue a bond and there would be a certain yield attached to that, typically backed by a government, but there are other ones. So specific to create a certain goal, benefit society. The next one is socially responsible investing, and typically and broadly, that is an exclusionary approach. So you would exclude certain investments or companies from your universe based on religious grounds, moral grounds, various other grounds. So that's socially responsible. It's an exclusionary approach, so you're not looking at the full universe. And the last approach, which is the one we have adopted, is looking at a company's environmental, social, and governance practices, along with the traditional financial measures, and then assessing what impact that has, if any, on the valuation of a company. So, and this suits us fairly well. We are long-term, we're valuation-based, so this ticks all the boxes in terms of our process. It fits very neatly into it, and therefore we've adopted that last approach. And how do we apply this? So, and I mentioned in the beginning, but not all companies can achieve all 17 year-end goals. So, and I always use the example, but a mine in the middle of South Africa has very little influence on life underwater, and so we wouldn't really encourage a company to adopt that as a goal. So keep focused on the goals that you can and do them well. And we have built up an extensive database on all the companies that we cover, looking at the factors that they have committed to and then tracking them. And that's the important part, is this is a journey. It's not a one-off. We can't just turn everything off straight away. So it's a transition. And so we monitor that over time, and we monitor the rates of change, and always looking forward. It's no use looking in the past. It's what companies are doing in the future. And then peer comparison, that is standard in any kind of valuation. Using external data and experts, this is a massive field. And in fact, in any investment aspect where we are not experts, we would call in external parties to assist us. And this is a new and growing field. And so we have and will continue to utilize external experts where necessary. And then lastly, and this is the part that speaks to our valuation approach, is to assess, is there an impact on cash flows, on earnings in the future as a result of these factors, both positive or negative? And then, or is the risk just so great that we need to discount our valuations? So an example here would be Sasol faces carbon taxes, so we can put those taxes into our model, and that affects earnings. However, we don't know the extent that those are going to increase in the future, and so we would add an additional or penalize Sasol more in our valuation to account for that unknown increase in potential taxes. So the quote from, I guess, a competitor, but Hendrik de Tooy, the 91 CEO, and it really speaks to our approach, and I really like the way he put it, is around transition. So we can't turn off coal-powered plants tomorrow. We can't stop driving petrol, diesel-powered cars tomorrow. It's the journey to get there. And so a focus on that, and a focus on engaging with companies on what they are doing to do that. And then where companies are not delivering, we have that engagement approach. We will engage with other people, and we have in the past on issues where we maybe need to get a bigger voting block. We have extensive records of engagement, and then I've spoken about adjusting valuation and position sizing. So certain companies, while they might be attractive, have potential extra negatives, externalities coming their way, and then we would either exit or have a small weighting to those. And then, exits if appropriate. If we see that a company is just not going to change their ways and that revenues are going to dry up as a result, we would look to exit. So in conclusion, we think they are important. Achieving risk-adjusted returns. So we want sustainable businesses. We want businesses that are going to be around for the long term. We want businesses that consumers are going to continue to support through purchasing their products, and therefore this is important. Just to reiterate, we adopt a valuation-based approach, and we have incorporated the ESG factors into that. So no change in our approach, and our approach has been consistent for a long time now. We are aligned with the UNPRI. We expect to be signatories shortly, and we always try and enhance not just this aspect, ESG, but all aspects of our process. And then engagement and that concept of a journey is important to us. Thanks, that's me for the morning.
Thank you so much, Jason. I do agree with you that basically it's a journey, and I think it's a journey that all of us have to walk together. I have a quick question for you, which came to mind just now, which is ESG comes at a cost. So what ideas do you have that can assist making ESG profitable as an activity and encourage investment?
Yeah, so if you don't mind, I'm going to use a technique and turn that around and say that there's a cost to not embarking on and engaging in the ESG journey. And that cost is in pure capitalist or Adam Smith style stuff. Consumers are just not going to buy your products and you won't have a business. And so that is the zeitgeist of the moment, and consumers demand that. So I think that the opportunity cost is far too great for this. Short and sweet on the answer there.
I like your answer. It's brilliant. I'll want us to sort of go to our next speaker this morning. That's Mr. David Levinson. I want us to touch on responsible investing so that we look at more practical approach. But I just wanted to sort of help you answer this for us, or agree with the statement that in everything that we do, you have to give it your all unless it's blood donation.
Hi, Japheth, was that aimed at myself or Jason?
You.
I'm awkwardly waiting here silently for Jason to respond, but I think that's a lovely statement. And we hope we're giving it our all currently at Nedgroup Investments, blood, sweat and tears, so blood included. But there's always work to be done. And I think in terms of where we are in our journey, we've set quite a nice foundation and the groundwork. And going forward, and I'll speak about our 4 key sustainability focus areas where we think we can have a material impact. And I think that's where there's definitely more that can be done and where we can be quite ambitious in our targets. Just to check that you can see my presentation okay there, Japheth?
Yes, I can.
Okay, wonderful. So I only have 10 minutes today. My colleagues will tell you that's not enough. I usually go on for a little bit longer. The title for my presentation is a focus on materiality. I'm going to touch on 2 key points today, and that's about defining responsible investing. And Jason spoke a fair amount about that already, so I won't go too much length on that. And then the second part will be about identifying materiality. And for those that are familiar with Nedgroup Investments, we have 4 key sustainability focus areas for the decade leading into 2030. So I'll touch very briefly on those 4 as well today. So in terms of defining responsible investing, one size does certainly not fit all. There's no universally agreed definition of ESG or responsible investing. And although there are those who complain about this, they're looking for a uniform definition. I think it's absolutely wonderful that we don't, that it's open to subjectivity. And one thing we've learned through Nedgroup by partnering with different boutiques is their responsible investment journey is very much informed by their internal culture as well. And there's most certainly not one size fitting all. We also have the passive versus active debate quite robustly internally. Because I'm a champion for responsible investing, many believe that I'll be on the fence of active, and that's most certainly not the case. What passive does is it gives companies an aspirant or an aspiration to get onto an index that has an ESG tilt. So there is that reward there. I mean, even ourselves at Nedgroup, I think, fell off the Dow Jones Sustainability Index recently, and it's really kicked the company into action, saying, how can we get back on there? For those that dialed into our summit, at least our Responsible Investment Summit a couple of weeks ago, would have heard a gentleman, Oliver Withers from Credit Suisse, and their approach is actually investing in the worst companies and actively engaging them to see how they can narrow that gap to becoming almost the best in their field. And that's how their approach to materiality and ESG. So most certainly not one size fit all. And as I mentioned, we obviously work with a bunch of boutique managers here at Nedgroup Investments, and their responsible investment journey is very much informed by their own internal culture. And what we do is try to partner with them to at least champion and support them in their journey through responsible investing. So Jason touched a little bit about ESG, and it's how you look in companies. So responsible investing, we look at and we do our annual due diligence on our fund managers is how committed they are, what are their internal processes, and that focuses very much on ESG investing. How are they voting? Are they engaging with companies? Do they have an engagement policy that supports that journey? And then last but not least is how engaged are they in the broader community, the investment community along responsible investment lines and collaboration. So those who dialed into our summit a couple of weeks ago will be familiar with the poll that we asked the audience during the event. This is just one of the poll answers. So when investing in sustainability, what is most important to you? I was mildly surprised here, but also unsurprised in some of the answers. I expected the second one there in terms of minimizing destructive real world effects on your investment to be a little bit more higher in the voting, as well as maybe the one at the bottom there in terms of aligning your personal values and views on sustainability. But that's why these polls are so wonderful, because it does inform a lot of our own product development and a lot of the work that we do in this space. So the two in the middle there take up, I think, almost 3/4 of the audience's votes. So market-beating returns from using sustainability insights. So quite a return focus there with not foregoing sustainability. And the second one from the bottom there, which is clear evidence that my investments are improving sustainability. And that was probably the one that I was leaning to. And I think we can get that sweet spot of where we are improving sustainability as well as achieving outperformance and benchmark beating returns for clients, then I think that's where we'd like to be. I think this question may come up later on is around greenwashing. So in Europe, they're introducing something called the Sustainability Finance Disclosure Regulation. There, I guess they have thousands of fund managers who some of them are embarking on greenwashing. Here in South Africa, it's a bit of a smaller universe. We may see a regulation like this down the line, but I feel that it'll be more few and far between what you might get in that bigger population size in Europe. And this is just an example there in terms of how some of the bigger international players have voted on climate critical resolutions. And one you might find surprising is BlackRock at the bottom there. I think about 8% are voting against climate resolutions. But where one of their key interventions is, and I do appreciate this, is Larry Fink's annual letter to companies saying this is what we're focusing on. And I think it does get companies to stand up and take notice. So that's a key intervention for them, despite maybe they're not necessarily walking the walk on the ground. So I think it's all about authenticity and not saying something and doing something quite different in the public space. So what are our key interventions in Nedgroup Investments? I'm currently working on a project with Amy Jansen, who I'm sure most of you are familiar with, our behavioral specialist, in terms of identifying what are our interventions and how do we influence certain decision-making behavior that really progresses the responsible investment story internally and externally for that matter. So on the left is our scorecard on how we may influence our areas of intervention. So like I mentioned already, we have our annual Responsible Investment Summit, which is supported by quarterly webinars as well. On the right, there are just some of the agents, which I think we've had across our events, which I think is an illustration of how the diverse set of actors in what is obviously a complex system of interconnectedness. So we have CEOs of blue chip companies there. That's Roy Bagatini from Woolworths at the top. We have a lady from the UN who spoke to us about inclusion and diversity, conservation activists on the ground, civil society, shareholder activists in South Africa and the UK, Clem Sunter, talking about ethics and climate change, And we even had a classical painter on the right there who's been documenting climate change through his artwork. So a really wonderful set of speakers which have offered quite a unique view, which also, I guess, speaks to the complexity. And sustainability is often about breaking down those silos and getting people from different areas to chat. So in terms of our scorecard, again, on the left there, I've marked ourselves quite well in terms of our thought leadership to date. We brought out a podcast, I think, on Monday around climate change. Our annual responsible investment review is basically a due diligence style report on 47 global fund managers around the world. In terms of building our capacity on our 4 sustainability focus areas, so these were identified last year leading into 2030. I think we're hitting the right notes, and it's really about progressing on that in the course of the next decade. Voting disclosure, Jason mentioned these are on our website, and we're looking to get these up with more regularity. I think we're looking to upload 2021 in the coming weeks or month or so. Deeper portfolio analysis. We have signed up to the MSCI as well as Morningstar are starting to really progress in terms of their ESG and sustainability capabilities. So looking at deeper portfolio analysis, and I have a slide in a second that shows how you can assess your portfolio against something like climate change goals. Our manager due diligence sessions are taking place at least annually, if not more frequently, and these are becoming more robust in terms of their discussions and the depth of the conversations. The second to last one, which is engagement focused on meaningful outcomes and then broader industry participation. I think this is a key area of influence for us in Nedgroup Investments anyway, which we haven't explored to date. As Jason mentioned, in terms of the United Nations Principles for Responsible Investing, we're looking to become signatories from the 1st of April. And this also gives us a platform to collaborate with both local and global managers on ESG concerns that are meaningful to us. So something definitely worth exploring. If we look at the entirety of our assets, I think we can have quite a significant amount of influence. And a transformational goal for us in Nedgroup Investments in bright green at the bottom there is to be recognized as leaders in responsible investing. And during the course of our behavioral project that we're doing with Amy, I've been a fly on the wall, my camera's off in the background, and the response from all the fund managers that are participating in their project during the first wave of interviews with the master's class is saying that Nedgroup are leaders. And I've always been quite self-critical, highlighting where others are doing things well. So maybe we are doing something quite right and hitting the right notes. So in terms of identifying materiality, at Nedgroup Investments, we've identified climate change, biodiversity loss, human and labor rights, and people inclusion and diversity as our focus areas for the decade. So touching on biodiversity very quickly, this is the biodiversity loss bending the curve chart. Some of you may be familiar with this. The world needs to arrest the fall in global biodiversity because, as you can see there, business as usual will be catastrophic. So Oliver Withers at Credit Suisse spoke about having a net positive impact. And I think our colleagues or contemporaries at 91 use the same term as well internally, which has led Credit Suisse to focus on things like deforestation and food production. So I piggybacked this off The Economist recently, looking at agriculture and food production, and in terms of share of habitable land on Earth. So agriculture is currently 50% share of habitable land on Earth, 37% currently with forests and 11% with shrubland. But what we're seeing is agriculture is, excuse the pun, eating into that land of forests and shrubs. So that's as human population grows and our food demand increases, the negative biodiversity impact we have. And I really think this highlights why Credit Suisse are focusing so strongly on deforestation. In terms of climate change, I've presented this word cloud on biodiversity loss in the past, so many of you may not have seen this climate change word cloud. This was the 47 global managers who participated in our annual review, and we asked them to highlight what are your key climate change risks and opportunities. And there's some ones that really stick out there: carbon regulation and pricing. So analysts are now able to price as they can put a price on carbon into their financial modeling. Emissions related, the energy transition. For those that are familiar with Ian Power of Truffle, every time I chat to them at this balanced perspective, he always wants to draw the discussion onto the transition. I think if I had a penny for every time he said the word transition, I'd be retired on an island in the Caribbean somewhere. But it's wonderful to see a manager looking so closely at the transition. And I think what Jason mentioned earlier was quite true about participating in that transition from an investment point of view. In terms of more opportunities, vehicle and transport electrification and battery and energy storage featured as well. So in terms of leveraging something like our MSCI license, this is looking at global emissions from 2000. And how they peaked. You can see them lulling a little bit during the 2008 financial crisis, 2009. The light green line shows what the Paris Agreement essentially is, looking to lower emissions by 25% as we head towards 2030. And these grey lines are a hypothetical portfolio looking at what their roadmap and goals are with regards to carbon emissions. And those that sit above the green line start to open themselves up for reputational risk, legal risk, regulatory risk, etc. So as a portfolio manager, you want to work alongside, and I think it's an important term, support these companies in terms of getting aligned with Paris Agreement and using, importantly, science-based targets. In terms of human and labor rights, this is quite often the most opaque and contentious one for us to deal with in our chats with managers. The overwhelming thing you can see there in bright black is none have been identified, and that was quite similar to biodiversity, where managers struggle a little bit with this, with the concept of human and labor rights, and looking at the complete supply and value chain of a company becomes quite intricate. Union relations and health and safety were quite prominent among South African investors, particularly in the resource space. Diversity on the top right there is incidentally one of our key sustainability focus areas. And this can really be enacted through corporate engagement and how they vote at AGMs. That's why we cannot discount AGM voting. The one on the far right is what I want to focus on in our next slide, and that is around child labor. And this is my final slide for today. I wanted to talk you through an engagement process that one of our managers had with Japan Tobacco. So I hope you can read this. I will read it verbatim for you. So in 2020, the fund manager engaged Japan Tobacco to establish what concrete measures have been taken to mitigate child labor issues, the relative success of these, and what more can be done going forward. The firm suggested a call where they spoke with several members of the company on the shortcomings of their existing procedures. It became quite clear that the problem is complex and multidimensional, involving different levels of the supply chain, where family farms, and this becomes quite culturally quite sensitive, are used in the agricultural supply chain. There is a danger that children are involved in work at younger ages than is acceptable. Japan Tobacco pointed to the establishment of their ARISE, or Achieving Reduction of Child Labour and Supportive Education program, and this program operates in Brazil, Malawi, Tanzania, and Zambia, and successfully placed around 6,000 children into formal education in 2019. So when the company were questioned about this initiative, Japan Tobacco added that they are open to expanding the program. So what are the outcomes of this engagement? So whilst the manager is pleased to see that Japan Tobacco acknowledged the severity of this issue and can demonstrate, and that's another important term for today, they can demonstrate that they're taking steps to help eliminate child labour, more needs to be done. So as a shareholder, the manager will continue to hold the company to account on these crucial issues. So in their engagement with the company, they urged Japan Tobacco to take a leading industry position in raising wages and suggesting that their policies were updated to cover children handling dried tobacco, to which the company was responsive. The fund manager is continuing to converse with the firm on their progress in tackling child labour and aim to report back to investors on progress with this ongoing engagement. So this offers a nice insight which often people who aren't privy to or access to these managers don't really appreciate or gain a deep understanding of how these engagements are going to date. And I think this is an interesting blueprint at least to see how an engagement policy is being followed. And I look forward to engaging with this manager again when we next meet to see how they've progressed in terms of their discussions with Japan Tobacco. So that's all from me for this morning. Thank you very much.
Thank you so much, David. I have a question for you. What is a behavioral change that you will want to see from investors to propel responsible investing?
Yeah, I mean, it can be quite a loaded question. So like I mentioned, we're working with Amy Jensen, our behavioral specialist, on identifying different actors within the system along that whole value chain of responsible investing. So the people dialed in today, even Justin's colleagues at WWF are participating. So fund managers, people in Nedgroup investments, wealth and financial planners, as well as other interested stakeholders will be participating in this. And the idea is being able to identify where are those flows and information. Because ideally what we like in Nedgroup investments is to get the questions around responsible investing, and they are very few and far between at the moment, because we like to get questioned and pushed on this. And I think if we can get the critical mass of people being interested in pushing this agenda, I think South Africa has some way to go, but we can go a lot further if it is collective engagement.
Thank you. Thank you, David. I want us to go to our next speaker, Justin Smith. Justin, please tell us why ESG is important for WWF.
shift the funding and investment money, towards more positive environmental and social outcomes and away from the kind of destructive impacts we're seeing at the moment is a really, really critical strategy. So I'll touch a little bit more about that as we go through the presentation. And thanks very much for having us participate as well. So maybe just to start and to touch in a little bit from what David said around the materiality side of things. I think one of the things we've really noticed the last few years is this incredible integration of environmental, social, and economic issues. And the World Economic Forum over that period of time has kind of illustrated that quite nicely. And if you really look at this year's report that came out in January, the key risks to the global economy have an incredibly strong, if not overwhelming, environmental and social flavor. Those top 7 risks are all incredibly interlinked, and they really show the kind of environmental and social impacts we're facing at the moment that we're going to continue to face. And if we don't deal with them effectively, our global economy is going to be more and more unstable and have more and more challenges for us all as well. The climate side of things was really mentioned earlier, and just to make the point from the WWF side, we really see climate change and biodiversity loss as the 2 big environmental related crises that we face. Again, they're incredibly interconnected and interdependent. So we really want, investors, fund managers and companies to look at both of them. There's been a bit more work on the climate change side in South Africa, but we're really pleased that the Nedbank team, David and colleagues, are really creating more awareness and conversations around biodiversity as well. But I think just to say, even though we had some really positive outcomes out of COP26 last year, we still have an incredibly long way to go in reaching the targets that we want to see around a 1.5 degree kind of capping of where temperature increase might be. So you'll see, even at the most kind of positive and optimistic scenario, where every country kind of updates their nationally determined contributions, where all the companies that have made commitments kind of meet them as well, we're still not quite there. So just to say, there's been good progress, but we still have a long way to go, and we need to keep that pressure on as well. And I guess that's playing out in our realities as well. So again, from a key economic impact perspective, in 2021, we saw $280 billion worth of loss coming through extreme weather events. The most extreme weather events over $1 billion each, massive impacts on the insurance and reinsurance sector, around government infrastructure funding. This particular picture is from Cyclone Ana, which hit Mozambique and Malawi and big parts of Southern Africa incredibly hard recently. And these are happening at a much more frequent level, and basically are off the charts in terms of the kind of planning forecasts that we'd seen in the past around what these extreme weather events might be doing. I think then, just to add, David spoke a little bit about the biodiversity side, and I guess the sad reality and the reason why we're also talking about this is WWF does a Living Planet Index every couple of years at a global level. And effectively, in the last 50 years, we've lost 68% of all biodiversity on this planet. And I mean, that sounds flippant and sounds simple, but it's incredible in terms of how much dependency we as humans have on nature for our resources, for food, water, for medicines, for energy, for our businesses in terms of how much they depend on nature as well. So it's really critical for us to deal and understand these issues very closely. I think that leads on to this kind of double materiality area we're seeing with a lot of the biodiversity issues as well. It's not just about the impact of the company, either directly or through their supply chains of biodiversity, but also this massive dependence or reliance on nature for the future kind of effectiveness and the future running of their businesses. And that really plays out specifically in a couple of key sectors like forestry, agriculture, etc. So again, some of the big sectors that David highlighted earlier in terms of how much of the planet they're currently using for their businesses going forward. And just a few days ago, a really interesting report that came out around biodiversity, and effectively our governments and businesses at the moment just continue to subsidize this destruction of our planetary resources. So about $1.8 trillion a year being spent on environmentally harmful subsidies across multiple sectors. So I think one of the big things we're trying to do is engage government and business, and we need more lobbying from the investor sectors as well around this in terms of shifting this. One of the big challenges around biodiversity and climate is this sort of funding gap in terms of helping particularly emerging economies with the changes and the transitions they need to make. but there is all of this money sitting here that's directed in the wrong way. So if we can push this into the more positive space, that'll help solve a lot of our problems without needing additional financing or additional funding. And I think contextually, we've seen so much growth and kind of pressure around the sustainable finance side the last couple of years, both from a regulatory perspective, from a legal perspective, in terms of pressure on the banks, investors, and insurance companies as well. We've seen at COP26 the Glasgow Financial Alliance for Net Zero, backed by $130 trillion, really pushing for commitments around the net zero space in a much clearer way than we've ever had from the investor community. We've seen much better integration of sustainable finance within the G20 thematic as well. We've had the task force on climate-related disclosures for a few years, but we've now seen biodiversity brought on board through the TNFD as well. Green bond growth, both internationally and also in South Africa, has been a really positive and incredibly quick space as well. And the predictions are for that to only increase in the next couple of years as well. As much as divestment isn't the ideal solution, it's a real pressure point as well. And we're seeing that divestment not only be on particular coal mining areas, but also on broader fossil fuels, on deforestation, on plastics and other issues as well. And we're seeing some of that play out within the South African regulatory and policy space as well, through National Treasury and other actors too. So from the WWF perspective, we've got a global finance practice that looks at a whole range of issues, working with the business community, with government and others around creating the business case, creating an awareness and understanding, and trying to shift in these particular areas as well. If we bring that into how we do that, some of it is, by catalyzing research and development around these different issues and what they might mean for risk within the investor or insurance space, for example. So a really big kind of thought leadership connection around many parts of the world as well. And then within South Africa, we've got kind of 6 main outcomes that we're driving, and really outcome 5 is a big part of our conversation today. This idea of us trying to work with and influence practices in the financial and corporate sector, improving those strategies and commitments, and working with businesses to really drive the achievement of those targets as well. We're very, very fortunate to have a couple of really long-term relationships in the finance sector as well with Nedbank and Sanlam that have been critical in terms of our understanding and our partnership learning around these particular issues as well. So maybe just 1 or 2 examples of what we've been working on. WWF about 7 years ago launched its own ESG fund, I guess realizing that we can't tell other people to do certain things if we don't put our own money where our mouths is. So we've got a nice 7 kind of year track record now in terms of the development and growth of the now Sanlam Living Planet Fund. We were very excited last year that it actually won a couple of Morningstar Awards, which has been really, really critical for us in terms of, again, showing that having an environmental and social objective to the fund doesn't mean that it's going to necessarily not achieve the performance objectives as well. So we are going to continue to drive and develop this fund and hopefully the investment into it. But it's got really good returns over a period of time and helped us with that sort of combination of certain sectors that we don't include, but also looking at the environmental and social performance of the companies that we do include. We've also realized that we need to kind of catalyze investment into SMME development and bring funding and finance into that space. So together with the World Bank, the Bertha Centre and Green Cape, we launched the Green Outcomes Fund a few years ago, really trying to incentivize local South African fund managers to increase investment into that space, with a couple of kind of key performance indicators of these businesses that we want to have investment in, with around energy, water, waste and sustainable agriculture, driving jobs on a both direct and indirect perspective as well. And a key part of that has really been working with a couple of catalytic finance partners across the kind of scope to try and bring that kind of expertise and broader network into really driving these businesses forward as well. So I think a key issue for us and a key thematic across this area is really that idea of collaboration, and one that I think Nedbank and the team are also driving very strongly in the way that they're engaging in this particular area. One, I guess, key challenge we've seen, and this is probably, I guess, fairly appropriate considering today's World Wildlife Day, but we've had a massive reliance on tourism kind of revenue for a lot of the conservation sector in South Africa and across the rest of the world. And with that tourism revenue having been eroded the last couple of years, it's meant, the whole sector needs to think a bit differently about how we fund and finance conservation and environmental outcomes. So we started a partnership called the Sustainable Landscape Finance Coalition to really bring together multiple partners around new innovative financing models that will keep our landscape protection happening across the board. And it's been exciting to see some of the different tools and mechanisms that have been achieved in this period of time, whether we use tax as a lever, whether we use offsets, debt instruments, carbon payments, the idea of trying to bring more money into extension support on the ground around agriculture and around protected areas as well. Nedbank's another partner as part of this, and Nedbank Green Trust has been a key funder of this work. So really another great link around this broader partnership thematic that we've seen. And then as we sort of finish off, a couple of things. We know that disclosure and transparency is really critical for those conversations to be able to take place with the businesses that are being invested in. So, really working with the South African corporate sector around climate disclosure, looking at some of the trends we've seen and how we engage and drive this forward over time. And then finally, also working with our various regulators. So at a global level, we've got a SASREG framework that we've developed to work with central banks and government departments around environmental, social and governance issues. And we've done that with the South African Reserve Bank and National Treasury as well. And we'll continue to work with them to try and develop that conversation going forward. So let me stop there. And really, I guess, emphasize our key message out of all of this is we want to try and develop a future in which people and nature thrive. And those dependencies we have on nature are so critical that we cannot thrive as individuals or businesses without that effort.
Thank you, Justin. I have a quick question for you. Are there any particular issues that you think they will, sort of occupy center stage where they will be more important than others in the near future?
I think it's probably kind of twofold. One, we've seen more and more focus around biodiversity and research being developed around the kind of business case for why biodiversity is so critical. So that's the one key one. And I think David also identified the other key one, which is really around human rights issues in the supply chain. We're seeing more and more legislation around modern slavery issues in different parts of the world and around interrogating the kind of risks that exist in multiple supply chains, particularly textiles, food and manufacturing. So I think that level of detail is going to get more and more focus going forward as people do, from a consumer level, ask more and more questions about where the products that they buy are coming from and who's been impacted along those value chains.
Thank you, Justin. What I would want to do is, in the order of having Jason go first, followed by David, and then you, Justin, I want all our panelists to sort of give us last remarks, that one gem that you want us to leave with from this particular session.
Sure, thanks for the opportunity. I guess what I'd like to reiterate to our clients and we look after their money for, that we haven't changed our approach. Our approach remains the same. We look at companies exactly the same. Our valuation process is the same. Our portfolio construction is the same. What we have done, though, is formalized and enhanced the process with the inclusion of specifically looking at ESG factors. And so this is not a departure from what we've done before. We'll continue to manage your wealth in the manner that we have, but with this very important factor, which we think is required for sustainable businesses in the future.
David?
Thanks, Japheth. Sure, I have one soapbox here, so I've got to use it wisely. I think it's ask the question. So to date, we get a question around, are you signatories to the United Nations Principles for Responsible Investing? And that's quite standard. From retail clients in the last 2 years, we've maybe had between 5 and 10 queries come through, the majority of which are, how do I gain access to green energy? Yeah, so just ask the question. I mean, we had one retail client essentially reach out to say they want to understand, or at least be invested in a fund which has no allocation to assets that are exposed to child labor or fossil fuel extraction. And that's one client on the retail side in the space of 2 years. So I encourage you to ask that question, because I feel like there is a disconnect between the man on the street and their values, and maybe not necessarily understanding that the way they can invest can enforce those values. So ask the question and push us harder, and we're always happy to engage.
Thank you, David. Justin, over to you.
key message is probably still around the collaboration side. I think kind of Nedbank and WWF is an example of how that can kind of inform and challenge both parties in terms of strategy going forward. But that corporate NGO government kind of triangle is probably the kind of critical space we need in South Africa. We know we've got capacity challenges across the board. So if we don't come together to try and resolve those, we're not going to make the kind of progress we need. And South Africa, both from a climate and biodiversity perspective, is a massively impacted country. So we don't want to, as one of the top 10 most biodiverse countries in the world, lose these incredible resources that bring tourists, bring economic development and investment. And those, I think that partnering is going to be critical for us going forward.
Thank you, Justin. Thank you to all our panelists. I think this has been brilliant, powerful, best session ever, especially around the CSG topic. From my side, I'm grateful for all the online viewers that got a chance to join us, plus the Nedbank team, including the technical team as well as the business unit. I will want to hand it over to the business host, who's Nele Japheth, to take it up from here.
Thank you very much, Japheth, and thank you so much to our panelists as well. There is a question, though, for Japheth, our facilitator, from an audience member. The question is, what has Goodson Capital taken in order to, what steps have they taken in order to become a more socially responsible company?
Thank you, Zanele, for the question. I think what we've done differently and what we did in a more proactive manner is the development of an ESG matrix as a tool. Essentially, we basically use that as template for every single engagement that we go into, as well as also help us in terms of scoring and in terms of deciding whether to go ahead or not to go ahead. I think I've answered your question, Zanele.
Thank you very much, Japheth. There's quite a few questions from our audience, so I'll just pick one or two, and any of our panelists can just respond to the question. One question is, why are we looking only at the private sector? What about the government? For example, the failing sewage system, which is polluting rivers and dams, and the ocean. Is Nedbank still investing in this space? I'm going to open it to the panelists. And I suppose, Jason and David, I'm going to put you on the spot.
I can start. Maybe Justin deals a little bit more with government than we do, but yes. I think that's a very good question. I think nationally, the government are a key role player in everything, from the energy transition to legal policy, etc. So at the moment, our focus is on the private sector, but I think Justin can probably elaborate more on national government, unless Jason has any comments. Thank you.
Yeah, I think as I mentioned earlier, we know capacity and budget is a massive challenge across many different departments, and water and sanitation in this case is probably the worst affected of almost all of them over the last few years. Mm-hmm. So we're trying to develop partnerships in all of our key water source areas to kind of manage the ecological infrastructure, so those upper catchment kind of key parts of the water system in South Africa. And Nedbank and a number of other corporate partners are funders within that particular kind of area of our work. So we're trying to fix the upper part, and then we need government really to maintain the infrastructure at the kind of lower part of the catchment when it does come into the urban infrastructure space. And we're really trying to advise and drive that as well. I think one positive signal is that government is reinstating its what was known as green and blue drop reports, where they look at sewerage and water quality issues within the different urban environments. And that kind of disappeared the last almost 6 years. So there's a level of commitment and transparency that I think is a positive signal at least.
Thank you. Thank you for that. There's quite a few questions. Unfortunately, we won't have time to go through all the questions. But what we'll do is we're going to ask our panelists to answer the questions for us, and we'll just respond to the audience a bit later. Thank you once again for joining us. Just a reminder that you will receive an email from us in the coming few days with a link to the recording of the webinar in case you want to share this or watch it again. And you would notice, please, at the end of the webinar, we're going to put up a QR code which you can scan using your phone so that you can give us feedback around our webinars. We would like to improve where there's improvement required. And on the 16th of March, around about the same time, 10 o'clock, we will be hosting a smaller, more interactive session where we'll be looking at the importance of financial advice and what to look for in an advisor. And this conversation will be facilitated by Mapalo Maku, and she's an award-winning personal finance coach. She's a City Press columnist and a best-selling author of a personal finance book that is entitled You're Not Broke, You're Pre-Rich. And what we will also have a panel in that session as well. We'll have our wealth managers, Paul Abrahams and Najiba Abrahams, joining us. And we'll have two financial planners as well, Anik Smith and Edmond Ade. Please remember, you can get more thought leadership insights and recordings of previous webinars and find out about our future webinars on our website. Thank you for joining us. Go well and stay safe.